Hello there everyone. Welcome to my channel Power Prof. I'm Dr. Akib and today we are going to discuss about another very important concept which is financial statements. As the name suggests, financial statements are actually the financial reports of your business. These are not merely the assertions or pieces of information in shape of words. Rather, these financial statements carry both the textual as well as the monetary information. Financial statements actually provide all sorts of financial data and information in shape of numbers, amounts, in shape of the assets, liabilities, incomes, expenses that are relevant to a specific business. These financial statements are in essence the final product of your accounting process. We discussed about the accounting cycle in our previous videos in which we talked about the various tasks we do perform in accounting. So financial statements are actually the final and end result of the whole accounting process, of the whole accounting cycle. And these tell us about the financial performance, financial position, and cash flow situation of the business. The purpose of these financial statements is to facilitate the decision making for the users of financial statements. We will be discussing about the users of financial statements in a separate video. For the time being, you should be able to realize the importance of financial statements as a tool of decision making for the business stakeholders who are also referred to as the users of financial statements. These are the basic financial statements as per the International Accounting Standard number 1. This is important to understand that the financial statements are designed as per the accounting standards that are issued by the International Accounting Standards Board, and the financial statements that are mentioned here and that are actually part of any business financial reporting and accounting process are provided in International Accounting Standard number 1, which is about the presentation of financial statements. As you can see here, that there are these 6 components of financial statements any business actually has to report to the stakeholders of the business. First comes the statement of financial position. It actually tells us about the assets and liabilities of the business. These two main heads are covered in statement of financial position. Its conventional name is balance sheet. So you can also term the statement of financial position as balance sheet. Then comes the statement of profit or loss. It is simply called income statement. It tells us about the profit or loss situation of the business. It covers another two important aspects of revenues and expenses of the business. And after comparing both the revenues and expenses, we finally arrive at the final result, which is in the shape of either profit or loss. Then comes the statement of cash flows. It tells us about the cash position of our business, and it typically covers three main activities with reference to cash flow information. Then comes the statement of changes in equity. It, as the name suggests, it actually tells us about the contribution by the owners as well as the distribution of resources to these owners in shape of profits in shape of dividends, etc. On the fifth spot, as you can see here, there are notes to the accounts. These notes to the accounts are actually theoretical and descriptive information, which is actually a sort of supplementary information for the readers and users of financial statements. These provide additional information regarding the things that are covered previously in these financial statements we discussed. For example, when we talk about balance sheet, the assets and liabilities are covered in this, but the details about assets, liabilities, and other relevant items in these financial statements are mentioned in the notes to the accounts. Finally comes the comparative information. The IAS one actually requires the businesses to at least provide the financial information of two periods. For instance, when we talk about a balance sheet, here you can see a specimen example that the data for 2 years is provided here. You can see here 2022 and 2023. So this is referred to as the comparative information. So now we have discussed about the components of financial statements. We have covered all the important financial statements that are actually the end product of our accounting cycle, starting from income statement and balance sheet and proceeding on towards statement of cash flows, statement of changes in equity, notes to the accounts. We will be discussing about these each in a separate video. Till next time, take care.